Hello and welcome to yet another masterclass. Thank you so much for everyone who managed to come in at this point. And today we're talking about research strategies. We're also looking at a bit of risk management. This is a very important topic. It's also important for you to highlight what you think is, one of the ways you could, or some of the research strategies that you use on a day-to-day basis. So you can just put there on the comments, and to just encourage you. One of you might walk away with something. So just put some text on the comments on what especially you use when it comes to research for yourself. My name is Munene Mathendu, and I will be walking you through this particular session. I hope I hope this will be a very helpful session. So most of this part will be a demonstration purpose, a demo, meaning that in most of the cases, while we might use some strategies in terms of while we might look at specific sites, it's also important for you to also write down some of the sites you're using or rather find the alternatives for you to be able to best learn at a later time. And without further ado, we are going to get started by looking at especially how to do research. I'll make these a bit bigger. So we've all come to terms, or rather, we've at least at some point been told, you need to learn how to do your own research. But what are the key research strategies that you can actually be able to use? And basically, what's available for you to be able to use in terms of the research strategies. So to start off, I'll take a look at, and I'll be using a couple of different sites and also be able to use different, different ways to demonstrate this. So do note that whatever we use here is not financial advice. We're just using it for demonstration purposes. So to start with, whenever you're getting started in crypto, you need to always think about finding the purpose of just a sec finding the purpose of the projects. That's a very, very key thing. Now and this happens for every other business. It doesn't have to be necessarily, say, Bitgate alone. So for most of the legitimate cryptocurrencies are usually designed to solve real world problems beyond just being another Bitcoin alternative. And that's where people who trade memes come in. It's very, meme coins, for instance, they're not, while they might be very popular, they're not some of the best cryptocurrencies to trade. Now, in the long term, so if, say, a coin lacks a clear purpose or a real world application, is that just calls for you to be very cautious. It might be a scam or a pump and dump scheme. And just to describe, a pump and dump scheme is basically cryptocurrencies which are just created which don't have a specific purpose in real sense. So that's why it's very important for you to always look for these specific projects. And we are now showing you how to analyze and find these particular specific projects. Now, if you are eager to invest in any new project, it's very important for you to find what the actual purpose for that particular project is. So be it, I'll give you an instance. If, for instance, you're eager to invest in, say, any new project, you may want to check and see, or rather find out, there are projects, for instance, who are working to have, say, tokenization of real estate, things like those. Those are actually real world purposes. There are, let's say, layer twos in in a specific cryptocurrency which aims to find which aims to solve a particular a particular challenge. Now, good examples, for instance, is I'll just use some of the largest cryptocurrencies here. Bitcoin, this is thought as the digital gold, and it's a decentralized money. The key purpose here is the fact that it's a decentralized P2P digital currency, and it can be used for payments, remittances. It can be also used to hedge against inflation. Do remember, however, that Bitcoin is still a cryptocurrency, which means it does carry a significant amount of volatility. Something else, maybe looking at Ethereum, which is a smart contract platform. It's basically a decentralized platform that allows developers to build and deploy smart contracts and decentralized applications, on top of the Ethereum blockchain. So the key use case here is the fact that it enables DeFi, for those who are new here, decentralized finance. It also enables NFTs and enterprise blockchains to actually work. So it's very, you can think of it as legitimate because thousands of real world applications are actually being used. Looking at, say, something else like Chainlink, think of it as a decentralized oracle. So something that actually connects the smart contracts to real world data, like say weather, stock prices, and sport. So you can literally pull data. If you're building, say, a betting platform, you could literally pull data using Chainlink. And these are some of the things that you just call that are actually the purpose of those particular projects. Now, think about, say, Polygon, uh, which improves the scalability of Ethereum. Think about USDT, a stablecoin that's pegged to the dollar, whose main purpose is actually remittances and trading, and reduces volatility. These are some of the purposes you can think of in terms of the long-term purposes. Now, some of the red flags you can take a look at. I'll also highlight some of the very interesting cryptocurrency projects which have had interesting or suspicious purposes. So if you think about, say, Squid Game, this was a token, a fake plate one token, and its claimed purpose was a token inspired by the Squid Game TV show for a plate one game. And what actually happened is that there's no game that was developed, and the developers blocked users from selling their tokens before they pulled a massive rug pull. And that's basically where, when we say rug pulls, is basically where you can't even be able to sell. So these are some of the very important items that you need to um, that you need to actually highlight. Now, looking at, say, another project which was a red flag was BitConnect. This was literally a Ponzi scheme. The purpose of this, the claimed purpose of this was as decentralized lending platform where users actually earned rewards by holding and trading the BCC token. But what actually happened is it turned out to be a huge Ponzi scheme where old investors were paid with new investors' money. So there was no real world utility, so no clear business models. And I think the story of BitConnect is the story of many scams, because this is typically how most of the scams come in. A promise of specific rewards that are gonna come at a specific time. So um, you can determine the legitimacy of a cryptocurrency by simply finding that particular purpose. Now, the second thing that you need to the second thing that you need to do is finding the white paper. And while we're here, I'll quickly take you through, say, a purpose-driven project. And in this case, for ease of use, we are going to use Ethereum. So in most of the cases, you will want to use index insights like CoinGecko. So CoinGecko is basically indexing different cryptocurrencies So think of CoinGecko as a Google for tokens. Now, what's the interesting thing here? I'll quickly just actually I'll find one of the tokens here, and you can be able to find the white paper and what the white paper says it does. And I want to find a token that I'm not used to. So not you, okay, a token that most of us are not used to. Okay, that would be top 100. So maybe let's take this token again, not financial advice. We're just using it for demonstration purposes. Now, looking at it, clicking on it, you will be presented with sorry, doesn't seem to load that fast, but you'll be presented with the coin page. So the coin page is right here, and if you scroll down here, you'll find something called white paper. And this white paper, when you click on it, it does pull up a PDF. So this explains what exactly does the project do. So looking at these, for instance, a purpose-built layer 3 blockchain. So unlike okay, just read through that. I don't want to go through that. And again, this is not financial advice. We're just using it as a demonstration for us. So you've seen the white paper basically contains the purpose of the project, and once you find the white paper, all you need to do is analyze and find red flags, also green flags. So a good white paper needs to be well structured in that it covers how, for instance, when I look at, say, the Polkadot white paper, it does cover how Polkadot connects to multiple blockchains, otherwise called parachains for interoperability. Looking for red flags, you want to actually look for red flags like vague or of a promising language. If a white paper is filled with buzzwords like revolutionary technology, guaranteed profits, just be skeptical. For example, if you again highlighting BitConnect's white paper, which made false claims about guaranteed high returns, again turned out to be a scam. So there's also a very important item to highlight, the fact that you need to look for technical details. So finding a legitimate white paper will actually have technical details, for instance, if it's a blockchain, how the blockchain works, the consensus mechanism, the security model, things like that. You also need to, red flags can also be in terms of unrealistic tokenomics. In case you look at how tokens are distributed and it's too many that are allocated to the team or early investors, this could actually lead to price manipulation or rug pulls. So these are very important item for you to actually take a look at. You also need to look for plagiarism or lack of originality. That's also a key red flag when you're looking at such items. Now, looking at after evaluating the white paper, some of the questions you need to answer: does the project actually solve a real world problem? If you can't answer that clearly, then it's clearly a project that you shouldn't be getting into in the first place. Other things you need to answer is the white paper detailed, or is it very well researched? Um, y- you know, is it very well detailed or well researched, or such items? So does it explain the blockchain mechanism, the tokenomics, fair or sustainable? For those wondering what tokenomics is, I'm going to get there shortly. Also, you could use some tools to analyze white papers. A good tool is called, one of the good tools I like is called Mezari. sorry, Mezari, like this. You just find this also a very good tool. You could also use the Bitgate research team. So the Mezari also is a very good tokenomics, where you can actually analyze that, but also CoinGecko, which offers a slightly simpler math. So you can see the tokenomics here. So this is not available. For instance, I'll, however, go through to Bitcoin, which is typically just a sec, we can just edit this here. So let's see whether we can find Bitcoin's tokenomics, and it should be an easier way out. Now, let's go to the next part where the stream is still not live. Okay, perfect. Let's quickly, sorry for the technical challenges. I'm going to switch to ensure we have good connection. Please confirm on the chat whether you can still hear me. Someone do a confirmation on the chat whether we can still hear me. Okay, perfect. Now, oh, perfect. Thank you, Sam. All right. Now, after you find the white paper's purpose, that's some of the things you need to highlight. Now, I'll go to the next one. I'll be try and be real quick. You can also find who's behind the project. So the most legitimate cryptocurrencies usually have a transparent team with public known figures. Perfect. So good projects usually have the most legitimate ones usually have transparent teams with publicly known developers, advisors, and investors. So good examples are of transparent teams and backers. If you look at Ethereum, it was founded by Vitalik. There is what we call the Ethereum Foundation, which openly shares development updates and research. If you also look at, say, Cardano, which was founded by Charles Honkinson, also projects like Polkadot, which was founded by Gavin Wood. There is clear transparency and team updates on what's happening. Now, key red flags you're looking at: anonymous teams and suspicious claims. So if you have no information about the developers, if a project does not mention who is behind it, be very cautious. Again, looking at Squid Game, the token, uh, basically there was no known founders, making it very easy for developers to pull an exit scam and disappear with people's money. Also, highlighting fake members, where some scam projects create fake LinkedIn profiles to look legitimate. They always they also can be able to pull such things. So it's very important for you to always cross check what you're looking at. Don't be the kind of people not doing research, and cryptocurrencies will always be very volatile, and you don't want to not add research into that volatility. So you also need to be very cautious of projects which are hyped by celebrities. Those endorsements, some of them use fake endorsements from influencers to attract investors. So if you look at previously the project called Ethereum Max, which turned out to be a pump and dump scheme, which was again promoted by Floyd Mayweather and Kim Kardashian. Again, these are some of the red flags you need uh, to ensure you take a look at. Now, you could also look at the rather other things you could also look at is assessing the viability or the project's sustainability. So a legitimate crypto project should always solve a real world problem and have a long-term sustainability goal. So be very wary of hype-driven projects that focus only on price speculation. These now, when you look at good examples, in my case, again, I'm gonna be using the top three cryptocurrencies, or rather, some of the top 10 cryptocurrencies, as they typically have very good, goals. Now, looking at Bitcoin, why is it sustainable? It's because it's a digital gold and store of value. So it has a limited supply of 21 million bitcoins, a strong network security, and increasing institutional adoption. If you look at Ethereum, smart contract ecosystem, it's sustainable because there's constant updates, Ethereum 2.0, high developer activities, and major real world applications. When you look at, say, Polkadot again, the reason it's sustainable is because it solves blockchain scalability issues by enabling multiple blockchains to work together. Now, key red flags you are likely to be looking at is if there's no real use case, if a coin exists only for speculation without any clear function, it's clear that that's a cash grab. So again, looking at BitConnect, which promised higher returns, and it had nowhere, basically there was no real utility to actually generate those higher returns. So then there's over reliance of on hype. So if a project is heavily or rather markets heavily itself by but doesn't develop new technology, you need to be very cautious. So another example is, say, SafeMoon, which used aggressive social marketing but had very poor liquidity and no real innovation. So a lot of meme coins actually exist in this particular space. So now it's very important to notice that to make a clear distinction between investing and gambling, or investing and quote unquote supporting other projects or supporting other people with money. So it's very important for you to make that distinction. So a good investor looks at utilities, looks at what does this particular thing bring me. So if you also find unrealistic tokenomics, if a coin has a very high inflation rate or low liquidity or unbalanced token distributions, it may be very unsustainable. So for example, there's a token which was called the Titan token, which collapsed from about $60 to near zero in hours, simply because its economic model failed. I don't want to highlight new projects which fall or look similar to this, but deep in your mind, you already know what projects match this type of unrealistic tokenomics. Projects, for instance, with more than 80% of the tokens being held by one wallet is a huge red flag for many. So it's very important for you to look at that. Now, other things to consider is checking the market activity and liquidity. So a lot of us may have this particular challenge that before you invest in, rather, you actually need to check whether you can actually cash out your money, all right? And that's what's called liquidity. So you may find a project has done 2000%, but is there enough liquidity for you to be able to convert that particular token to another token, to a stable coin, for instance, without affecting the price? So it's very important to use tools like CoinGecko, CoinMarketCap absorption, check the trading volume over the past months. You need to also check the price action and the market cap, which exchanges it's listed on, the order depth, to actually avoid paying overinflated prices, and be very cautious of projects which only are listed on decentralized exchanges, as they may have very low liquidity. So other things to highlight here is ensuring that you have tracking and research tools whenever you're doing research. Again, good projects, for instance, you could look at Mezari, you could look at Bitgate research team, which also have very good research items. Other things, maybe find interviews with founders, understand the project's vision, verify if the team is actually knowledgeable and transparent, and try to detect if there's any inconsistencies in the statements, and don't rely solely on the website. Also cross-check information across other things. Uh, Other important items is again verifying tokenomics and smart contract data. And I want us to quickly go through tokenomics verification for us to get an understanding of what we mean by tokenomics. So I'll pull up this sheet here, and I'll use Bitcoin to analyze the Bitcoin tokenomics and be able to share more information here. Now, looking at Bitcoin, for instance, first of all, how is this price achieved? The price is literally achieved by dividing the total market cap by the amount of circulating supply. Now, the circulating supply is basically the amount of coins currently in circulation. All right. So Bitcoin has a maximum supply of 21 million. But how many coins can actually exchange hands? That is 19 million and 820,000. Now, for you to get the actual price, for instance, if you took this price here, and let's quickly pull up a calculator here. If we took that price there, I don't know if I can paste it, but we could just quickly 1,937,000,000. So 1,937,000,000. Okay, I'll just put some more zeros here. If you divide that by the current circulating supply, that be 19,800,000, okay, 19,800,000, you will be getting sorry, I put in 1.9, I put in 197 billion instead of 1.9, but basically you can see it's basically 97,828, which is since it's an estimate, that was basically the price of Bitcoin at that particular moment. And that's how the tokenomics come into play here. Now, coming down here, if you look at Bitcoin tokenomics, let it load, and we can see how the distribution of tokens was done on Bitcoin. So other projects, I'll use another project as well. I'll use okay, just work a second. I'll use another project, for instance, this project here. If you look at the tokenomics here, okay, this is again not available. Very interesting. Now, if you look at the tokenomics of Bitcoin, still loading. But anyway, we could use the data we are provided with here. This is sufficient information to make you understand exactly what to invest in and what not to touch. Now, if you look at a project like this one, you can take a look at maybe the annual price has significantly been falling down. But again, this is for demonstration purposes. This is again not calling out projects or anything. So this project has $1 billion worth of market cap, but the circulating supply is less than 10% of the total supply, which means the actual real assuming everything was to come out today, rather all the tokens were to be distributed today, then it means most of those tokens would be valued at, say, about 10% of the current valuation, being 0.1%, 0.1 per coin. So these are some of the things. The release structure, the token release structure is very, very important for you to be taking a look at, because these also dictate whether a project is a good buy on the long term, or you're just buying to support the project. These are some of the very important things that you need to highlight. Now, I'll check the charts. Let's see some of you who have shared some of the things they usually look at. It would be very important. Let's take a look at who has shared what they're looking at, who has shared what they look for in a project. Okay. I'll be waiting. Someone here says, who is this? Olujun Topi says they are an airdrop farmer. So if you're starting out, and for instance, again, I typically highlight these, asking, again, some of the things that I've come to realize with people is, some a couple of people may despise the airdrops, but we've seen, for instance, from the Jupiter airdrop, from the some of those airdrops are very, very helpful, very interesting. So don't miss out on free money. That's literally free money. So I'm seeing Peter Blaze here says they look at use case. They also look at, has it been audited as well. So these are some of the things you can. I'm really happy that we actually are able to look at some of these items. So we need to make a clear distinction between investing and actually gambling, because if you're going to sites like pump.fun and you're literally buying whatever is being thrown there, it's literally you taking money and just giving it out. And yes, some cases maybe a project may come in handy, but what has happened in most of the cases is you're likely to you're likely to not be able to make anything significant. It's very important for you to always follow things that actually make sense. Now, that's the first part. Do keep your comments coming in. I'll be able to show them up here. If your research, basically your research strategies, and any of your um, risk management strategies. And now I'm quickly going to go through risk management strategies, and I'm going to reference this article here, which was part of the reference items, and I'll be sharing this article here for us to be able to follow. Right. Now, when we're looking at, first of all, what is risk management? You have to understand, in any business, okay, I need to make the article bigger. Okay. So, in anything that you're doing, whether it's trading, whatever you're doing, you need to figure out, basically everything carries out a risk. And how risky is everything? Is the fact that we actually assured that, for instance, your life is a risk. You are assured that you'll never come out of it alive, right? But how do you manage that risk? Is you not presenting yourself in places that would typically put you at a significantly higher risk? That's why you're not in war right now. You don't want to walk into a war zone, and it's your brain doing some risk management. However, when it comes to trading, simply because it might not to many be a life and death situation, some of us may not, specifically go, or rather, some of us may not specifically take a look at it from a risk perspective. So, but financially speaking, risk management is actually, again, I'll check these definitions here, is basically defined as a framework developed to protect a firm's capital and earnings against possible threats while ensuring their continuous growth. So it's important that when you get to the market, it's very interesting because the markets can be very good to you and can be very bad to you. And I've constantly seen this, that some of us are going to fall for FOMO, the fear of missing out. a token has launched and it's already done, say, 2000%. And that's when you feel like, yes, it's a good time to be entering the market. 24 hours later, it's literally trading at 50% the cost and you're 50% down. That's how much cryptocurrencies can be risky. So a comprehensive risk management strategy is very necessary for you to actually for you to be actually remain sustainable. Now we are going to take a look at three strategies, rather three categories. Step one being the category of these. But anyway, three categories in place. Looking at the preventable risks, things like internal risks which can be controlled or avoided, such as operational errors and mismanagement of your funds. When I say things like those, I mean, say you put in a trade at, say, 50% of the cost. That's an operational error. You don't want to be finding yourself in such a crisis. Now, you can also take a look at it in terms of strategic risks. So you need to evaluate risks taken deliberately to achieve specific objectives, like entering a new market or adopting a new trend. For instance, recently, we look at AI agents, which have been very trendy topic. But again, one simple news can literally make our whole industry, shake. So you can also take a look at external risks, which, are coming from external factors beyond your control, including, geopolitical news, which could actually affect, say, the crypto market. So when it comes to the risk management process, you need to identify those particular risks. I don't know if I'm following these that much, but I'll just quickly look through here. You need to find the risk that you want to first, understanding that there is actually a risk. So recognizing the potential risks that could actually impact your trading activities, then proceed to analyze the risks, assess the likelihood and the potential impact of the identified risks, and finding a possible risk evaluation, which basically means you prioritize risks based on their severity and their probability, and looking at the risk treatment and basically developing a strategic plan to mitigate or transfer the risk or accept those particular risks. And you can actually move ahead to monitor and review those once that's done. Now, when I'll go to Bitgate right now, and I'll show you things, a couple of things that maybe we should start looking at more often. And for instance, on the futures side, for those of us who are typically trading futures, I want us to go to futures first. Right. Then it's loading. Okay, today my internet is not the best. Oh, I'm on VPN, that's why. So let's get rid of this first. Okay. Now let's take a look at the now it's loading slightly faster. Let's in terms of the risk, there are a couple of things that you need to understand in the crypto markets. First of all, the volatility and the fact that there could be a liquidation incidents, or the amount based off the leverage you're using. So I'll come in here and I'll get to a futures trade, and to show you like a um a very unconcerned type of trading. So I would come in here and I see Bitcoin is trading at 97,000. Maybe I have a few dollars and I can, first of all, get into the market on market. And then maybe I use all the leverage that is presented to me. So I could come in here. Okay, I need to sign in. Just a sec. Let me sign in for us to be able to. Okay, as we wait to sign in. Okay, we have. Okay, we're here. Now, I'll quickly get us through to futures. And I want to use futures specifically because um, I notice a significant amount of us say maybe trading without really evaluating the risks. And I show you one very huge risk and how to mitigate it. So we are trading Bitcoin. We see maybe a downtrend here, and we are very optimistic that we are going to make a lot of money. So we just go on to use all the leverage that is offered to us. We use all the capital that is offered to us, and we open a short trade, maybe. Okay, let me try this. Okay, it doesn't look like I can. Okay. I've reduced the leverage just a bit. Okay. I'm going to use okay, it does look like I do not have any funds on my demo account. Just a second. First of all, is this the demo account? Yes. Okay, perfect. So this one, we can see we've been availed a significant amount of these amounts. So let's open a huge trade. Okay, the trade is now live, but we've literally used all the amounts here. And what's going to happen is we are likely to find a liquidation because, for instance, here, no, we actually opened at a very minimal leverage. I want to show you like one with a lot of leverage, basically an unsustainable amount of leverage. Okay, perfect. That's good. Now let's use all our positions and use maybe all the leverage here. Okay, maybe most of it. And we can enter on market, open short, and then let's confirm. This one even doesn't allow us to do that because these are some of the features I think I like about Bitget because it does try to prevent okay, oh, the order quantity is more than the maximum. Okay, anyway, using a lot of leverage without necessarily uh, taking taking into account the fact that you could actually be liquidated. These are some of the risks we are talking about. It's very important for you to always look at that. It's very important for you to not take positions just because maybe the market is going in one way. For instance, in this one, I've been able to open this. It's a short trade, and you can see our margin, our margin rate is the estimated liquidation price is literally a few percentages up. So these are some of the things like a lot of things could go wrong here. So you need to always calculate how much exposure do you have. Now, other things I'd like highly insist on us using is this: the take profit and stop losses. Take profits and stop losses allow you to Biget actually does present you with all these tools because it allows you to sell at specific prices, take profits or stop losses at specific percentages or at specific prices. And that's majorly what I would typically highlight for us to use. So you could actually ensure that you configure stop losses, you actually size your positions well, in that your positions should typically not, a general trading rule is your position should not be more than 10% of your position should not be more than 1% of your portfolio. So that's very, very important. So it's very important to always think about that when you're putting in your money. And in addition to that, managing and controlling your emotions. I see a lot of you've lost, maybe gotten liquidated, and you're out there saying, okay, I'm gonna recover this money within X time. Today, I don't want to sleep before I recover this money. These are some of the things that will lead to very bad trading behavior without looking at sentiment, basically without looking at anything that actually affects the markets. But generally just getting into a trade without any real uh, any real strategy. So you also need to these are some of the strategies that you could actually use, and my key strategies um, for users would be, when you're trading, rather, you could take a look at some investment strategies, maybe looking at, say, day trading. You could enter positions and exit within the day, but with very minimal margins. You could also take a more long-term approach using swing trading, and these are basically positions held anywhere from a few days up to several months. And the goal is to identify undervalued assets and profit from the larger swings in their prices. And other items maybe is looking at other trading strategies like scalping and buying and holding. Uh, there are some users who also profit from scalping. You could also look at a more passive play of buying and holding, which ignores short-term fluctuations and requires patience. You also need to understand technical analysis indicators like relative strength index, which typically is a momentum indicator that shows whether an asset is overbought or oversold. And these will typically give you a more long-term approach into looking at an asset. You could also look at simple moving averages, exponential moving averages, and these will give you clearer signals, especially on the longer periods of time. Bollinger Bands are also very interesting to look at, and also ensuring that you are building a well-diversified portfolio. Now, your portfolio need not to always have 100% in cryptocurrencies. A very well balanced portfolio would typically have, say, cryptocurrencies, stocks, bonds, cash, real estate, and commodities. And I know some of us are like, I can't afford, say, real estate, but you could actually, your $50, $70 could take a look at maybe cryptocurrencies which are involved in tokenized real estate and commodities, things like those. You could actually be able to, or even keeping some cash in hand, which could also give you better entry points at a later time. So these are some of the things that you need to be highlighting whenever you're getting into the market. All right, I see time has already moved. It's close to an hour, and I hope this is been very helpful. I will take some questions. I'll take some questions, so do ask them on the chat. I see Mahmoud asking whether this is a recording. So yes, after this session is over, you can be able to rewatch it using the same link, since this is a recording. All right, let's see whether we have any further questions, and we could end our session, and we could actually end our session. All right, in the meantime, do remember to join our Telegram communities, which is scrolling down here. And I mean, it's very helpful for those of us who are not there yet. Join our Telegram communities. It should be very helpful for all of us. All right, all right, all right. Okay, as we start, do remember to ask your questions. I highly recommend to get your questions asked right away. And let me check. All right, okay. Without then further ado, we will close the session there. It's been an amazing time. Okay, I see one more. I see here. So the quantity is the amount of USDT divided by capital we have futures here. So the quantity, the order quantity. Yeah, typically is the order quantity would be multiplied the amount of not USDT, but the asset you're holding multiplied by the amount of leverage you're taking. So if it's 50x and you have 1 Ethereum, then you are on a 50, that's the order quantity, 50 Ethereum. So I believe that's answered. All right. Without further ado, then we will close the session there. It's been an amazing session with you all here. And thank you so much for those who managed to stay throughout the session. The link again can be rewatched using the same link. Have yourselves a good evening. Bye bye for now.